All right, this episode's been it's been a long time coming, my friend. Long time coming.
Hey, I'm honored to be here.
Thank you, guys. All right, so for this episode, we're going to get into everything Bitcoin and macroeconomics. My good friend over here is also my big bro from the fraternity, and we go way back. And we've been planning this episode for quite some time.
Yes, we have.
We were going to do it on Sunday for the Bitcoin halving special, but now we're post Bitcoin halving, and we're just going to get into everything surrounding Ilan's backstory and Bitcoin and the real estate market, and just going to try to educate all y'all on what really Bitcoin is. I've been getting a huge amount of texts regarding Bitcoin and some altcoins, and I think there's just a lot of confusion out there on what it actually is and why I advocate for it so much. And I think our goal here is to at least just get one person to buy into it, just a small amount, even if you're making $10 purchase because of this episode. Please tweet at me, message me, anything, just communicate with me because we're here for you. Any questions and all.
Absolutely.
But we'll get into my guest over here, my good friend Ilan. How are you doing, my friend?
Hey man, I'm doing great. It's good to be here. I'm glad that we took a week for this because, I'm seeing your guest list. I'm like, you got Mike Naft, you got Stephen Cohen. I'm like, man, he's bringing in the hitters. I gotta brush up here. But no, it's good to be here, man.
I'm hoping we can educate everyone. And as all my listeners know, the backstory is always important as to bring a credibility for whatever credibility even means nowadays in the world. So let's just give everyone who Ilan Banner is and kind of your profession and leading up to this conversation.
Absolutely. Well, I'm only a part-time Bitcoiner at this point in time. But, in my day job, I'm a professional commercial real estate investment analyst. I started my career back in 2007, working with my dad. He was a commercial real estate broker specializing in apartment sales. So I started in 2007. I got to see the very last transaction before the Great Recession. Yeah. It was pretty awesome, and then it wasn't. So that was the beginning of my career. Had a few internships, and then I was licensed in 2014. Started at the Equity Group, moved to a couple different shops. Started with, in the footsteps of my father, selling apartment complexes. Then I moved into more retail. My dad went into development, so I was kind of a free agent. Then I joined the team that does all the Starbucks here in town. So I was doing a lot of the site selection work, selling sites to Starbucks committee. We identify a site, purchase it, develop the property, and then we'd do dispositions where we'd sell the property, a triple net investment asset. Then from there, that was a pretty good time. That was at Logic Commercial Real Estate, one of the fastest growing brokerages in the state. All in all, with my brokerage career, I was part of $100 million worth of transactions. And some of the cool ones, I'd say the coolest one was Bonnie Springs. I was a part of that.
R.I.P.
Yeah, and then I took a step back from that, and I went into the valuation side of things. So now I'm the head research analyst at Valbridge Property Advisors. We do property valuations, appraisals for commercial properties, hotels, apartments, industrial, retail office. And that's what I do during the day.
So what are the two main differences then, I guess, between valuation and being out there in person with people trying to sell the property?
The two main differences, I'd say the biggest difference is price versus value. Okay. Commercial real estate brokers are not allowed to quote value by law. They can only quote what the price should be because that's what their expertise is in selling. There's a lot of regulations surrounding valuation, and that stems from global financial crisis,
Oh, man.
previous one. A lot of people got in a lot of trouble once the investors, bought something way too expensive. They're in litigation with the banks, and then they wanted to sue anyone they could to be made whole. And a lot of brokers back then were putting the word valuation on a lot of their opinions.
It's like a buzzword almost.
Yeah, well, it's not valuation is a legal word in real estate.
Okay.
And so we've learned from 2008 that brokers cannot use the word valuation. They can only use price because that's the only thing that they're experts on. So I figured I'd take my game up to the next level and get into the valuation side of things. So I can be a true expert of real estate, which I have a lot of confidence in at this point.
I think in Vegas too, it'd be a good start as you see a lot of emerging or even just full on markets moving out here with the Raiders. And, when millionaires move out into a city, they bring their respective businesses with them. So you'll see.
You're absolutely right. And, I was running it up and down the street selling that story for years. The movement of Las Vegas from being a tertiary market to being a secondary market was pretty big. My father actually sells to capital out of New York and San Francisco and many other major financial markets to come to Las Vegas and invest in development. And he was using a lot of those. Our growth was in the top 5 in the nation leading up to the lockdown, and we had fantastic rent growth, job growth, and we were finally diversifying the economy. Unfortunately, we're not continuing that trend at this point in time.
That's it's something actually I was talking with Clark County Commissioner Michael Nathwith is how we were getting ready to diversify until this situation, which we're definitely going to see the new normal, quote unquote, which everyone likes to talk about. But going back to, I guess, commercial real estate out in Vegas, is it still relatively cheap compared to other cities as far as like developing commercial real estate?
So I'd say it used to be. So, and the reason I say that, so Las Vegas is a late recovering market. So out of the last recession, the national real estate market recovered in about 2011.
So it's about 2.5, 3 years from the crisis.
Yeah. So, it had a kind of a flat bottom for 2 years or so, 18 months or so. And then started recovering upwards. That's when the trend changed back up, right? So Las Vegas didn't recover on the commercial real estate side until 2013. That's when we started. Yeah, we're 2 years behind, and it was one of the best pitches towards the end of the cycle, which I'm calling an end to the previous cycle here. That's big news. The old cycle is over, guys. Sorry. So leading up to the end of the cycle, we were using that pitch a lot. We were a late recovering market. There's still meat on the bone here on these deals. We were trying to get money from places like Denver, like LA, where the cap rates were already, sub 4%, which for the listeners here, a capitalization rate is just a valuation of real estate, takes the income and puts a percentage on it, and that's the price, right? So average cap rates in Las Vegas were anywhere between 5% and 6.5%, where and that's because we were a tertiary market, so there's more risk, so there's higher yield. In markets like Denver and Los Angeles, the cap rates were under 4%, which if you think about what the mortgage rate is,
Yeah, I heard Denver's approaching LA prices now at this point.
Oh yeah. Denver was one of the fastest recovering markets. They were fantastic. Really, really nice market. Interesting thing about those cap rates and valuations is if you do you remember back to 2015 when they first started raising the interest rates?
I could tell you that don't know much about it. This was kind of before I started paying attention with Bitcoin and everything. So, and I was still a senior in college. I was still a different phase.
Hey,
so please educate me.
Absolutely. Absolutely. So, the end of 2015 was kind of a slowdown. Okay. People were getting a little nervous. Europe was hurting at the time. People were starting to think maybe this is the end of the cycle because it had already been, 5-6 years into this bull market, and that was pretty long at the time, right? So people are starting to get nervous, and then the Fed comes out and says, "Oh, we're going to raise rates," and a lot of financial analysts and traders were like, "Oh, you can't do that. We like this cheap money," and the Fed, they don't really listen to people, so they went along and raised the rates December 2015. At the time, I did a little research on how that would affect real estate prices because, you think rates go up, real estate prices go down. That's just, a rule of thumb there. And I looked into the correlation between raising rates and cap rates specifically, which is what is used to value the real estate. Almost like it's not quite a PE ratio, but, in stocks. But
And what's PE?
PE is price to earnings ratio. That's basically, you'll see little snippets on the headline saying, the PE ratio is too high on these stocks. Everything's overvalued, right? So if the cap rates are really low, you could assume that there's more risk to the downside because if they go up, you lose value, right? So with the interest rates going up, the cap rates should, hypothetically go up with it, right? Because the mortgage rates are going to go up. Well, what it turns out through my research that there's actually less of a correlation between interest rates and cap rates than there are in liquidity in cap rates. So if in reality, in real practice, as long as there's available money, people will take the mortgages, even if it's negative, even if the mortgage is higher than the return on the investment, they'll still take it out for that real estate.
Is that because they want to hide their money or put their money into something?
No, it's really the nature of real estate investment. You're buying, it's valued on today's income, but real estate investors are looking ahead.
Okay.
Their time frames on those large properties is more like 10 to 15 years.
Okay.
So they're looking at, what's year three's net operating income and what is that compared to the mortgage? And the mortgage is still cheap. So I see a lot of growth on the horizon. So I'm willing to take that risk. So as we saw, 2015 to 2020, or let's go to 2018 when they stopped raising rates, cap rates kept falling with higher rates, which is counterintuitive. And these prices kept running pretty tremendously. And then finally in 2018 through 2020, Las Vegas started to catch it a bit. You saw the Raiders come. You saw a lot of these, Black Rocks and
the arenas were being built.
The strip real estate was being purchased while the operators were trying to go asset light. And, kind of a toppy signal, but
yeah, you did see MGM actually sold 2 of their properties to, was it Black Rock?
Yep.
Yeah, because they saw something as you were analyzing.
Exactly. They actually did research on that deal. That was in February. That was February 14th this year. And they did a joint venture. So they purchased 49%. And MGM Growth Properties kept 50.1. So they're the controlling shares. But interesting deal. That was $2.3 billion for that stake, as well as some stock purchasing as well. The fundamentals looked great until we shut down the economy. Now it's not as fun. So a little background of my firm, Valbridge, Matthew Labowie is the principal of the firm, and he's actually a hospitality specialist, and he does hospitality valuation across the country. Big deals. I'm not allowed to speak about specifics due to confidentiality, but some very, very large properties across the nation here, and we keep our finger to the pulse of the market when it comes to hospitality and the effects that Corona is having, and it's not very. I'm not very bullish. I'm not very bullish on hospitality, and obviously anyone can put that together. But the numbers are just coming in pretty weak.
Do you think the recovery, since Vegas took almost an additional 2 years to recover, do you think now with the circumstances surrounding coronavirus, we don't know when everything's going to open up and people are going broke or they're getting bailed out, all situations are different. Do you think the real estate market's going to take longer to recover and there's going to be another delayed effect?
See, the real estate market, it's very complicated because of what the Fed's doing, right? So naturally, the prices want to come down. We all know this. Mm-hmm. We all know this. Naturally, the prices want to come down. You have a lot of businesses, which are tenants. Tenants, landlords are a business as well. Those are majority of my clients throughout my career have been landlords. So I understand their business. In fact, a family friend of mine / former client owns a lot of retail real estate here in town. He's got over 30 credit tenants. That means, national chains type of tenants.
This would be like McDonald's or any sort of franchisable
company. They have very strong either corporate or franchise guarantees. Of those 30 tenants that he has, only 3 of them are paying rent.
Really? Did they go into a forbearance guarantee?
When it comes to, when you're talking about landlord-tenant relationship, it's not like a bank relationship, right? It's just like as if you own a fourplex and you have 4 different dudes.
Okay.
And,
they're all individual.
They're all individual relationships, and some of them, some of them have been a great tenant for, over a year, and you want to keep them in there and you want to work with them. And the other ones, these are a pain in the butt. Let's get them out of here. So, with credit tenants, you want to keep all of them. And, you have 3 out of 30 paying. That's a little tough.
That hurts.
Now as a landlord, you have to go to your bank and say, hey, man, I'm in Las Vegas. We're the most affected market in the entire nation by Corona.
You could see that we were trying to build off of that reliance of tourism, and just as we were getting off of it, they said nope.
Yeah, that was, that's been a very big sticking point for institutional investors coming into Las Vegas. Is what if the Strip shuts down? And as locals, we're like, what are you guys talking about?
It'll never happen.
It's never going to happen. So yeah, it's worst case scenario for Las Vegas investment real estate, to be honest. And naturally, the prices want to come down. There should be a lot of evictions, a lot of foreclosures, but we have a lot of the government incentives to keep everyone in place. And now you have the Fed and the Treasury trying to, print enough liquidity to get through this short crisis. Okay. So the question I have about whether it can go down is if they're going to put a moratorium on foreclosures, right? How's that going to affect everything? Is it going to be more flat? Because I can tell you one thing, the prices have already come off. They've already come off.
Really?
Yes. 15% or more. Yeah.
And this is just commercial? This transfers over to...
this is commercial.
Okay.
I've never sold a house. I'm not a residential expert. I don't know residential fundamentals that well. So if you're, trying to buy a house, hey, I can't advise you on that, but I can say they're highly correlated. They're highly correlated. So I'm telling you the commercial view. The commercial, we're hurting. We're hurting. I don't see any price appreciation anytime soon. Now, it depends on how far the prices are going to come off because of the money printing. So, naturally, commercial real estate acts as an inflation hedge. And, we're going to start speaking about that topic very soon, but it's naturally a very good hedge against inflation, especially properties like self-storage and multifamily, which is apartments, are two of the best. Hotels historically have been good.
That's because you have individual people coming in and out every day.
Exactly, shorter term leases. The lease time frame on office, retail, industrial is longer, and they have more structured increases. So let's say you have 3% bumps a year. That's pretty standard on retail. If inflation starts running up at 10%, now you're losing 7% a year.
And when you're dealing with commercial, those are large amounts of money. So that 7% could be 70,000 or 700,000.
Yeah, exactly. So, that's why for majority of my career, I've been really focused on multifamily apartments because, I think that is the strongest investment in real estate. Everyone's got their opinion. A lot of people like industrial. A lot of people still like retail. Even with the changing environment, there are definitely opportunities there too. But right now, I'd say not so much. Now, back to what I was saying about the inflation hedge. Usually, historically, it has been a good inflation hedge. However, right now, we have kind of an issue with demand. It's a demand side issue.
Because everyone's in place. And you have companies that are going out of business too.
Exactly. So we have a little negative force there on their income generation. Now, the reason why it's not like gold or Bitcoin is because it's income producing. And usually for the past, few decades, it's been an investor's market. Income producing properties or stocks or whatever have, been very strong. Buy and hold type deal, right? That's not what we're in right now. That should be made clear. We're not in a buy and hold. Don't buy the dip right now. Don't do it. Don't do it. It's not that environment right now, in my opinion. And it's income producing, which usually is pretty good. But when your income is under fire and you're producing less income, and your entire market has been flooded with debt based upon that income, now it's a little deflationary. So now you're taking, because of all the debt in the commercial real estate market, which we're in a better position than we were in 2008 in terms of how leveraged everyone is. That is a fact. There's a lot more equity out there, but it's still, 2008 did not have this kind of hit to vacancy that we're about to experience. So it's going to be very interesting. The hotel experts, the bullish ones are saying 2 years before they recover. The bearish ones are saying 5.
Yeah, you could see, I've seen reports with MGM and Caesars Entertainment talking about their own phased opening where they're only going to open one hotel at a time. And I've seen predictions of some hotels not even opening up till towards the end of 2021 because they think that the demand's not going to be there.
Yeah, a lot of top tier analysts are calling for the end of 2021, early 22 as the recovery. They're taking it seriously. We're not, the V-shaped recovery, we're going to go back to normal once we open up. That is just,
it's blasphemy.
It's the media trying to calm the street down, which serves its purpose. You don't want people freaking out because it'll exacerbate the issue. But, to your listeners, no, I don't see a very quick recovery here. This is, the stock market crashed faster than it did in the Great Depression, the 29.
Dude, when you compare those charts with each other too, it's just like 2 or 3 times the speed as far as the market. I think it depleted like 30%, I think was the bottom, around 30%. It hit in like 27 days where the 2008 financial crisis and the, the depression.
Yeah, 29.
And yeah, took almost 100 days to get to that point.
Yeah, in 1929, that depression lasted over 10 years. So
It's not the roaring 20s that I wanted.
I don't, yeah, that was last decade.
Yeah.
That was last decade. Yeah, we have an issue with the financial system is the problem. That's the underlying issue here. The corona was just the catalyst to get it started.
Yeah, the accelerant. I've been saying accelerant, catalyst. There's just
It's definitely the catalyst. These problems were already here before. I both were aware of when the Fed started entering the repo market back last year in late September, early October.
They did it a few times too.
Yeah, they did. And
can you explain them what the repo market is too?
The repo market, to keep it simple, the repo market ensures liquidity for all these, large entities trading money.
This is like hundreds of billions or tens of billions.
Exactly. It's, all this money becoming due and, I'm taking money from here, throwing it there. There wasn't liquidity and the Fed had to come in and make sure that people don't default. For example, to put into perspective, the repo market was what caused 2008. Okay. So that's all you got to know about the repo market.
And it becomes like a cascading effect if they don't step in.
It's because once one person can't pay, then 10 people can't pay because that's how levered up we are in our financial system. So they started stepping in September, October. I remember both of us on Twitter commenting on this, saying this is the beginning of QE forever. And the Fed adamantly maintained that, no, this is not QE. This is just a short-term thing. We're going to go back to normal. And if you look at the track record of the Fed and what they say, they're about 50-50, telling the truth and lying.
Which is not good when you have the power to just print money at will and basically inflate the entire market. You need to be 100% or else this becomes where we are now.
Well, you'd think that there'd be more inflation out of this, but there's still so much deflation, right? And everyone asks, where's the inflation? Where's the inflation? For 10 years, they asked this question, where's the inflation, right? Because we used QE to get out of 2008.
And this is a quantitative easing.
Yes, excuse me. Quantitative easing, which basically is a roundabout way of the Fed being able to say, no, we're not printing money, but really they are, is the layman's terms.
It's their PC term.
It's the PC term of, we're printing money. So they went back to instituting QE. After lowering the rates all of 2019, they had to start doing QE. And, saying that they're not doing it, and they had to maintain it up through the spring when we had the market crash. And what happened during that March market crash? Every asset on the planet went down in value.
Everything.
Bitcoin, gold, commercial real estate,
stocks,
everything took a huge dip. Now, it was exacerbated because there wasn't liquidity in the market. Bonds, which
is supposed to be the safest out there.
The safe haven bonds took a hit. Why? Because everyone was trying to get into cash at the same time. It's almost like a financial market bank run, right? Is what occurred. And there was not enough liquidity. People couldn't even sell bonds. That's the most safe investment on the planet. Okay? They couldn't sell that. The bonds were hyper volatile for 2 weeks. And, that's just telling you that there's major issues. And that's why they had to, at this point, in the current system that we are in, we have to print the money. We have to.
Yeah.
We're put in the position where we have to. Maybe it's not the most appealing option, but it's kind of necessary at this point. We're really moving towards modern monetary policy.
The buzzword.
Modern monetary theory, MMT. This is popular with a lot of the progressives, popular with school of thought of AOC type, okay? And the theory behind it is, we have this massive debt load, right? It's never getting paid off. Let's be honest. Let's be frank.
What's it at now? It's like 20 something trillion.
Yeah, I mean, it's over the size of GDP. So GDP is about 21, 22 trillion.
That's what we produce as an entire country.
That's our entire economy's production. So we still have the largest economy on the planet. Hallelujah.
It's the only thing saving us.
Hey, America's still the best, guys. All right, don't listen to these guys out here telling you America's not great. America is still the best. Don't worry about that. But it's some challenging times ahead. When it comes to modern monetary theory, what they believe is, you have these massive debt loads that are very deflationary, right? If we didn't print money, what would happen to all the prices on the planet? They'd go down. There's not enough dollars to buy everything up, right?
Because the entire world's priced in dollars. That's what happens when you're the world reserve currency.
We are the world's reserve currency, and I won't get into that part of it. I won't get too extremist there, but yeah, we are the world's reserve currency. Places like China and Russia don't appreciate that, but they have to listen to us because we're the best. And you have this massive debt load bringing down prices. It's just a deflationary force. Over time, it wants to push prices down, right? So the theory is what we're going to do is in order to stimulate the economy, we're going to have high government spending, okay? So we'll like infrastructure plans and, good thing. This is the hypothetical of the way it's supposed to be. Infrastructure spending and government programs,
basically pretty much anything. That's
$1,200 a month, right? UBI will stimulate the economy to counteract the deflationary force of all this debt and slowly inflate the currency so that the debt is less of a load, right? So you're printing the money, and now the debt doesn't really mean as much anymore. Right?
Because
when you have inflation, you want debt because now you're paying it back with cheaper dollars, right? That's kind of Econ 101 with inflation. In inflationary environment, you want debt. In a deflationary environment, you don't want debt, right? So they're trying to counteract this deflation with inflation, and that's kind of why I'm on the fence of how far commercial real estate can fall, because you have the Fed put,
the first bill was $2 trillion.
Yeah, I mean, they're not done printing money.
Yeah,
you saw them. They said QE unlimited.
Literally said they went from QE 1 back in September to I think the first stim bill was QE 3 or 4, and then after the stim bill, what's his name, Jerome Powell, who's in charge of the Fed, came out and said that I will print as much money as we need to get this economy rolling. And so basically that comes into QE infinity.
Yes, we have unlimited money printing at this point. Now, historically, everyone's going to point back to Germany. Back in the 1920s, Weimar Republic. They, out of the Treaty of Versailles, they didn't get good terms, and their economy was kind of decimated by it. And they had that hyperinflation. The best known case of a hyperinflation in a developed country. And, you see the classic picture of the lady with the Deutschmarks in the basket, and the basket was worth more than all the cash that was inside of it. People stole the basket and left the money. Yeah. That's exactly how Hitler came to power, because people were they were decimated economically, and that's what usually causes the revolutions.
Yeah, and you see that happening in some third world countries right now.
It's already happening, yeah. It's going to happen here last because we're the reserve currency. So everything on the planet is getting decimated by the dollar, currency-wise. You see a lot of the less developed countries already experiencing hyperinflation, Venezuela, Zimbabwe.
I think Brazil's in there.
Argentina,
yeah.
Yeah. So it's, just because it's not happening here yet doesn't mean it's not happening in other places. So they're already experiencing inflation, but my theory is that we're going to experience deflation first here in this country, where a lot of people lose their assets before, it's the pain trade. Is what the market's going to do, the thing that's most painful to the most people. And that's going to be first doing some pretty extreme deflation where people who are leveraged are going to lose their assets. And then coming out of that, the response by the Fed or the government, whatever, the Treasury, is going to be inflate the currency. It's the only way. The only way to pay off the debt is to inflate the currency. And you're going to have a snapback effect where you lose your asset and then all of a sudden inflation comes in and you're not able to benefit from it. Kind of like 2008 when people lost their houses and people lost, they got margin calls on their investment stock and they got liquidated. And then all of a sudden now Bernanke comes in with Obama and they're doing QE and inflating assets only. And then you have this massive run up in asset prices across the board. And the only way you could benefit from the recovery was to have a balance sheet. And if you didn't, you kind of, you missed out on that entire run. If you weren't in place from 2010,
SOL.
2010 to 2013 was the time to set up for that entire bull run. And if you didn't have a balance sheet and you couldn't make it through and you got foreclosed upon, you're going to be behind for the entire rally.
And you get to watch the entire thing happen.
So that's a similar thing is I believe in play here. That's why I'm kind of, at this moment in time, I'm a little conservative on the traditional asset side. I've been getting texts from people saying, "Hey, should I refi now? When should I buy a house? When should I buy some real estate?" My only advice is wait. I personally would not do a cash out refi right now. That was in the previous cycle. That was just the mark of death. Refining at the top because you're taking out a percentage of whatever today's value is, but we don't know how far these prices can fall,
which would leave you at a huge negative.
Exactly. Now I can see where you want to do that, take on more debt with all the money printing because you expect this inflation coming, but the pain trade is for there to be deflation first. Excuse me. So I think that. It's kind of a sit and wait when it comes to real estate.
And that would be due also because of they keep talking or throwing on the word of negative interest rates, correct? That
Yes.
A lot of people keep doing it. I saw Trump tweeting about it a few days ago to bring negative interest rates. But can you kind of talk about what that is and what that means?
Okay, so negative interest rates, it's a little, people can't really understand why you would do this. So basically, instead of when you lend money out, so let's say you're the lender, right, in this situation. So you lend out dollars as the government and you pay them to hold on to that money you lent them. Makes no sense, right? Why do it? Because we're at a point where, like I mentioned earlier in this interview, the interest rates don't matter. It's the liquidity that matters for these asset prices. That's what people aren't getting still. They're still thinking, back in the 80s and Warren Buffett, intelligent investor and all this stuff. That's not how it works anymore. The way it works is it's all about liquidity. It doesn't matter about the interest rate. So basically the interest rate is just an incentive for people to use the money. So people obviously are not lending because they see that the prices could go down. So what's the only way to incentivize them to lend the money is to give it to them and pay them to lend it out. And that's what they're doing. Well, we're not doing it yet in this country, but they've been doing it in Japan for a very long time. And here's some bullish news. Okay, guys? Everyone's like, death of America. This is terrible what the Fed's doing. Well, hey, Japan has been negative interest rates for quite a long time, and their debt to GDP ratio is 4 times higher than ours. So they made it. They're still alive. They're still a power, but there are social consequences to it, and we're starting to experience a little bit of that as well, but definitely not at the scale of Japan. So, it is possible. And that's a lot of the MMT stuff comes, from that case study.
Japan.
Japan.
Just thinking about that.
They still haven't recovered. They still haven't recovered from the late 80s.
And the amount that their Fed was, I think they just printed like around $1 trillion too, didn't they? And their GDP is like significantly lower than ours. And so their ratio, their balance sheet is exceedingly high.
Yeah, I'm pretty sure they're well over 400% of their GDP.
That hurts. So,
We're slightly above 100% here.
So I guess we could go into more of the inflation with this new stim package that might come out and what that means.
It's definitely going to happen.
Do you think it'll pass?
I don't see how they can stop. They cannot stop, because if you take a step back and stop listening to all the hopeful news and look at the reality of the situation, we're going into a very deep and nasty recession. We've never shut down the economy like this before. We've never reopened an economy like this before. And we still don't have a cure for corona, right? So you have a mixture of the actual numbers being terrible, sentiment being terrible. That's the most important part of our economy, because we're a consumer-based economy. The consumer confidence is not high right now.
It's terrible, especially when you can only run at a lower capacity too. Like restaurants are 25, 50% capacity.
It's, I'm inconvenienced, and it's a risk to me and my family, so I'm just not going to do it. It doesn't take everyone to think that way. It just takes a few people out of 10 to think that way, and it's a massive hit to the economy. And I think it's more than a few right now. This is not going away. It's not bullish right now. So I see this continuing. So what was the question there?
At this point, I'm just trying to think of, if there is a massive inflation, then what assets would be good to go into if you're afraid, if, like you said, commercial real estate, you don't know where the bottom is, or even if there will be a bottom, or if, obviously we're at the top, but who knows how long it'll go on for. We are the reserve currency. All the other country-backed currencies, which we call fiat currencies, are, we'll say, shit compared to the dollar. But the sentiment around the dollar is terrible because of all of this printing. What do you go into? What are the assets that are good?
Okay, so back to what you were saying. I don't see the Fed stopping the money printing anytime soon. I don't see them stopping the stimulus checks anytime soon.
That's what everyone wants, though, right? Andrew Yang UBI.
Andrew Yang UBI, Yang Gang, let's go. He seemed crazy last year, and then all of a sudden now you see guys like Mitt Romney saying, "Oh yeah, we need to do UBI now." So I thought that was a little funny. But they're going to get everyone hooked on UBI. Period. That's going to happen. They're going to keep printing money. That's going to keep happening. They can't afford to not keep printing money, because so much of the workforce is going to be out of work and destitute. Now, here's the thing, side note. I think a lot of your listeners should know this, is that, John Restrepo, the #1 economist here in Nevada, came out with a report a couple years ago, I think 2018, may have been 2017, about automation in Las Vegas. Now, prior to Corona, prior to the lockdown, we were supposed to lose 47,000 jobs to automation on the Strip and, in the suburbs in the next 3 to 5 years.
And they had started already with like the well bartenders was one of the stops. I saw they did a few kiosks at some of the front desks.
That was before Corona. Okay. Now, on top of them wanting to do that for efficiency purposes, now they have the guise of, hey, we're going to be healthier, cleaner establishment. We have the robots, and there's a lot of jobs that are not going to come back. Okay, so the stimulus is going to continue.
Yeah, even MGM came out and said that if you're not rehired by September, then your job's gone permanently.
Yeah, they were waiting to cut the jobs, and this is kind of the opportunity that they're going to take. So a lot of jobs are going to be gone for a while. Stimulus is going to keep coming. Inflation should start coming. Now, where would you want to go? Well, going into this year after the market crash in March and the Fed's response, I was personally very intrigued by gold and cryptocurrencies for the remainder of the year into next year. That's where my head's at, investor cap on. They did sell off with the rest of the market with the liquidity crunch of March. But
everyone needed cash, so they sold off. And Bitcoin sold off the hardest, but gold and everything sold off with it.
Gold sold off pretty darn hard as well. And I made sure to keep my eye on it for the recovery. But what ended up occurring is that a lot of people's accounts, and when I say people, I mean entities, and I mean billion-dollar entities, had stock equity positions with margin. They got stopped out. They got margin called, and they needed to pay the broker, and so they needed to liquidate across their portfolio, right? So their gold got hit, their Bitcoin got hit, their other stocks, their Apples got hit, right?
And that's when everyone started freaking out. We call it in the crypto world. It was Black Friday, March 3rd. It was on a Friday, and it was the 13th. Bitcoin literally went down 50% one day, which it's actually happened before.
Once before.
But when you sell off from 10K or it was 9K, went down to 3,800. Man, that's a gut punch.
That was the first time I was emotional about cryptocurrency in 2 years. I felt it. I felt it in my gut. That was hard. That was tough. And I've exposure to a little bit more speculative cryptocurrencies, so they got hit even harder. And not a fun day. Hey, we've come back since then though. So gold and cryptocurrencies.
But why too?
Coming out. The reason why is that they have a fixed supply. A lot of people call gold. Who's the rich dad, poor dad guy?
Oh, dude, he just made a call today about Bitcoin. I forget what his name is.
Robert. I'm sorry to all the rich dad, poor dad guys out there. I apologize.
He made a 75K Bitcoin call today.
That's pretty decent. That's okay. That's okay. That's a decent one.
We'll get into
conservative. So he calls gold God's money. Dollars are government money, and cryptocurrencies people's money. So even gold does add supply because there are gold miners. In fact, I like a lot of gold miners right now.
That's the company, right? Who does the digging?
Yep. I actually own, I have to disclose, I own gold miner stocks. They've done well. And gold does have some inflation to the supply, but not as fast as dollars.
It's low. I think it's in the 1% area.
Yeah. And, the Fed wants a minimum inflation rate of 2%, by the way. And I think we might run past that after the deflationary period is done and we're back working in the economy. Like if we went back to work today and everything was fine with the over $2.5 trillion of money supply added to M2, there would be some inflation. There would be some major inflation occurring because we've added in the last 3 months the amount of money to the money supply as we had in the last 3 years. Okay. So that's material. See, if you're thinking with your investment cap on, that's a material number. And so you have more dollars, and if the economy was back to normal, they would be worth less. Gold performs very well when investors get defensive and when there's money being printed. And it's proof is in the pudding. If you look at the chart from the end of the massive drop in 2008 into the recovery, gold performed extremely well and reached an all-time high. And a lot of analysts are pointing to that. I've seen a $3,000 gold call. It's at $1,750 about right now. $3,000 gold call, and I've seen some astronomical numbers like 10,000, 50,000 on gold. But that's dire situation. You don't want that. You don't want that scenario. Now, gold's young cousin, Bitcoin. That's gold for millennials. In my opinion.
Gold 2.0.
It's better than gold. I'm going to come out and say it's better than gold.
Yeah, it's digital gold. There's actually a company, Grayscale Investments. They actually did a campaign ad that was going to run during the Super Bowl, but it got taken off last second, and it's called Drop Gold and Invest in Gold 2.0, which is BTC. But so millennials, they'll by far choose Bitcoin over gold.
It just makes more sense.
It does. I think people are confused by it. But let's go to gold for a second. And what gives gold its value? I mean, it's just shiny rock if you think about it. Like Bitcoin, there's nothing. It's just code.
Good question. Why does gold have value? I don't know. Ask Peter Schiff. I don't know.
Yeah. It's just like, why does the dollar have value? It's a fiat currency. It's backed by the government. The dollar isn't backed by the gold. Sorry if you guys thought that, but
no, we're not on the gold standard.
That was taken away. The last gold standard, I think, was issued in the 70s.
Yeah, Nixon got us fully off of it.
Yeah, and so the government. The dollar is only backed by the trust within the government and the stability. And in an environment like this where people, let's say, are not happy with the government because of the massive bailouts that happened to all of these companies who were issuing stock buybacks and taking, let's say, Boeing, taking 90% of your profits and buying your stock and artificially inflating it, and then them willingly know that they're going to get bailed out by the government. How much trust do you actually have in the government for that? So that's kind of like the synopsis behind fiat currencies. And this isn't just America. This is all across the entire world. It happens. Like we said about Japan, their fiat's trash now because of that.
It's been like that for a while.
Yeah. And so a lot of people are beginning to realize that the U.S. system is, one, it's corrupt, and the dollar is... its purchasing power has decreased by like 80% since the 30s when it first came into fruition.
Hey, I want to defend the U.S. right now. I think it's just our system is long in the tooth. It's long in the tooth. It's we've been running this system for over. You can say we've been running it for 60 years. Okay, the way that we are now, I'd say Nixon is the start of what we are right now. Okay, it's just like all systems. It gets we're at the end of the lifespan, just like a business's lifespan. We're just too heavy to the top side, right? We need a reset. And a lot of guys are calling for that now as the reset. But
there has to be some sort of alternate solution.
So the alternate solution is obviously not going back to the gold standard because that would send us to the Stone Age. I saw a few months ago, I think it was in February, Trump was talking about replacing Powell with this lady who's a gold bug and was talking about gold standard stuff. And I was like, yeah, right. What is he thinking? We should lower the rates. We should go negative interest rate. We should print more money. Trump, it's very funny. His fiscal policy is most closely related to Bernie Sanders. I find that to be funny. But I digress. So
here, I want to go into something too about value. Okay. So the dollar, the value is $1, but what the fuck does that even mean? And so everything is denominated in dollars and gold.
Well, the value of a dollar is defined as, the value of a dollar is the full faith and trust in the United States government. Okay. Still the number one, even today in the current scenario, we're still the cleanest shirt in the dirty laundry pile, period. China's taken it. Europe is just a mess. Japan, we already know about Japan. South America is crumbling. Their currencies are all massively inflating at the same time. So, yes, America is still number one.
Yeah.
The dollar, that is going to strengthen the dollar, as we've seen. Dollar's still strong right now because people need to get into dollars. It's the dollars replaced gold as the reserve, the safe haven asset of the world, as we've seen in March of this year. people had to sell their gold to get into dollars because dollars are the reserve and the safe haven.
Everything's denominated in it.
And now they're printing more dollars because of that. Now,
when you have the number one country in the world that's just doing everything at will, you have to kind of find something outside of this realm in order to value stuff. And so I'm just going to dive into the Bitcoin hole. I think it's time now.
It is time.
And
I was trying to put it off as long as possible. I didn't want people to think that, I'm just here shilling Bitcoin, but, I am shilling Bitcoin right now.
We gave them the backstory. So in 2008, we had the economic crisis, and that's when they started introducing QE as we previously described. On October 31st, 2008, Satoshi Nakamoto, which is a pseudo-anonymous term, which means it's a fake anonymous. We don't know who it is. It could be a he, she, they, fucking dinosaur for all we know. Like, we don't know. They introduced this white paper to the world, and a white paper is basically a scientific paper that describes whatever the study is on, performed before or after. And what they proposed was this digital asset called Bitcoin, and it solved a few issues that had been going on within digital currencies. Digital currency was not new when Bitcoin was introduced. There were some predecessors. There was eGold, DigiCash, eCash, a few of them, but the issue that they could never figure out was called the double spending problem. And what the double spending issue is literally what it sounds like. When you're issuing a transaction online, what prevents that person from issuing that same transaction twice, and therefore double spending $1 twice? So this group person, he, she, Satoshi, they solved this through the mining algorithm, which is also a Byzantine fault tolerance consensus algorithm. And I know that sounds like a lot of mumbo jumbo, but basically what that is if you don't know what the Byzantine generals problem.
Are we Byzantine? I thought that was Neo. That was Byzantine, and we're UTXO.
It's so it's a form of it.
It's a form of it.
The consensus of a proof of work is what it is. And it's basically like, how do you get everyone to agree on a consensus when there could be a degenerate basically within the group? That's kind of the short-term idea of it. And so that's what they solved with the mining algorithm. And what mining is it's basically cuts out the third party. So if you're like right now, your dollars are in a bank. You're not possessing anything of your dollars. And if you want to send money to your friend, you're probably going to go through Venmo or Cash App or something like that to send them. So now you're using two parties to send it to the person that you want to. You have your dollars held up in a bank, and then you have to issue it through Venmo to therefore go to that person. And now they're charging you $1 if you want to do it instantly, or you could do free and wait a day at time, which is really fucking annoying because it's your money. So Satoshi designed this algorithm where people dedicate computer power to this cryptographic function, which is disguised in a lot of numbers that is way above my intelligence grade. I could just understand it, but being a coder, I don't. These transactions are masked in coding, and by the amount of computer power that you dedicate towards this transaction is the amount that you're returned in Bitcoin, and what's something that's called a block reward, which we'll go into. But basically just know that Bitcoin, they solve the double spending and this fault tolerance policy through proof of work consensus algorithm is how to get everyone agree, which has game theory tacked in it and a lot of other things, which is probably why a lot of people get turned away. It's because it seems like a cult almost at times. Because it's
very much so.
Yeah, it solves a lot of these socioeconomic problems within the world.
Yeah, so to help translate that to your listeners, basically over 10 years, 11 years, Bitcoin has proved that each fraction of a Bitcoin is unique. The uniqueness is very important. It can't be counterfeited. Okay, so the supply is capped. And you're basically what it's trying to do in response to 2008, there's an outroar. There's something called Occupy Wall Street. Bitcoin is the final remnants of Occupy Wall Street. And what we're trying to do here with Bitcoin is reduce the friction of that transaction. So we're taking out two custodians, the bank and the processor, and we're doing direct peer-to-peer transactions. So, I can send you, Jake here, I can send you $50,000 with, 30-cent fee. We didn't have to go through a bank holding my money, asking me why I'm sending this, making me wait 3 days to process, charging me exorbitant fees because who else is going to move this money for you and who else is going to keep this money safe, right? The issue with cash, similar to Bitcoin is, you can get robbed. So the banks know that and they say, okay, we'll hold on to the money for you. They don't hold on to that money. They lend it out. They're on fractional reserve.
Which means that I think the fractional reserve is like, they only need $1 in the bank for every like $9 or $10 that they issue out.
Exactly. So they're lending money they don't have. Mm-hmm. And that's why, we had that. That's why the Fed needs to prop up the repo markets to make sure everyone's got their money, because once the music stops playing, no one's got any money. So that's the issue with dollars and the way that the banking system works. Currently, the banking system's in the best shape it's been in a very long time. So, a lot of people are very optimistic that the banks won't default. However, we've proven through 2008 and 2020 that the system is, like I said, long in the tooth, and we need a pretty radical change. Obviously, with the rise of populism on both the right and the left, the public has starting to realize that it's kind of basically a scam right now, to put it bluntly. The baby boomers have all the money,
and they've been in power for decades.
They're living a lot longer. And when I'm saying baby boomers, I'm not talking about your grandmother or your parents. I'm talking about the baby boomers on Wall Street. Okay. They've been in power for a long time. They made a lot of money in the 70s and the 80s, mainly the 80s, with the huge stock market boom. And that's why they still have all this money now. And it's not trickled down whatsoever. It never has. And through quantitative easing, the printing of money, and the Fed the only way that they can affect the economy is by inflating assets. And who has the assets? 80% of the stocks are owned
by the boomers.
By the boomers, guys. So they're funneling the money to the boomers. That's where the wealth inequality comes from. That's why, it's hard out here for a millennial these days. So obviously that system needs to end. They're printing us, or they're, putting us in a very bad position where all this debt is going to come due when we're, nationally is going to come due when we're in peak earning years. So we're going to have higher taxes. It's going to be a reality.
So we're basically going to pay for it a decade, 2 decades down the road, massively.
We're going to be paying for it, and paying for it for many, many years, because it's a lot of money. When we're in our peak earning years, we're going to be paying off the baby boomers tab. That it is what it is. So obviously we know that the system's broken and old. So one way to do it is to inflate out of the debt. It's actually the only way to get out of the debt is to inflate it and to have another uncorrelated asset that people are in to kind of mitigate the consequences of this inflation.
Or like they like to say, a hedge against inflation.
Crypto hedge. So that's why I'm extremely bullish on Bitcoin, because, we're past the point of the cultists being the only holders. Okay. So like if you're looking at the S curve, you got the smart money. That's kind of the cultists, in my opinion,
The early adopters.
The early adopters, the smart money, people who can connect the dots, got in a couple years ago. Now, if I was listening to Mike Novogratz, Galaxy Capital.
Yeah,
founder, manager. He's he manages billions of dollars. and he's very bullish on Bitcoin. He's one of the biggest Bitcoin bulls in the market. He was on CNBC talking about, where are the inflows coming from into cryptocurrency leading into the half. We had erased all of the losses from that 50% candle, and we hit $10,000. And now CNBC is picking it back up again. So obviously it's going to dump soon. He's on there, and bear in mind, Bitcoin's going up, over 100% here in the matter of
a month and
a half, while people are out of work, unemployment spiking up, consumer spending is down, saving hit its highest rate since the recession. So it's not retail guys coming in. Where's this money coming from? Novogratz is like, I'm seeing hedge funds putting their positions in, and I'm going to see, and you guys are going to see stories coming out of people having positions. 3 days later, Paul Tudor Jones, big time, billionaire, coming out and saying, yeah, I have 2% of my portfolio.
100 mil he put into Bitcoin futures.
$100 million. Okay. $100 million. That's 2% doesn't sound like a lot, right? But this guy is worth, tens of billions of dollars. So $100 million on Bitcoin. And he compared it to, get this, 1970s style gold. And what was occurring in 1970s? Stagflation, which is very likely to happen. What is stagflation? You have inflation of food prices, commodity prices, things like that, but you don't have wage growth. And that's similar to what we're looking at, staring at the face of right now. People have less income, and you're going to have the Fed inflating everything at the same time. So everything's going to cost more, but you're not going to have any more money. And that's stagflation. And gold performed extremely, extremely well in that environment. Now, it was actually illegal to own gold in this country leading up to that point. After the Great Depression, they made it illegal to own. They did forced
buybacks where you had to turn in your gold and they gave you their issuing dollar.
Exactly. And then they opened the market back up. Gold performed extremely well in the 70s. And Paul Tudor Jones, who was there, was like, I kind of see Bitcoin shaping up a lot like that right now. And he's willing to put 2%. And if you look at the CNBC panelists, Fast Money, Squawk Box, these guys are all millionaires, by the way. They're not just, reporters. They're all investors. And they're around money every day, all the time. They all own Bitcoin.
All of them.
They have to disclose it when they speak about Bitcoin. Even that old man Joe, I was like, oh, really? Kernan. Joe Kernan, old conservative man. He was a very big skeptic of Bitcoin the last few years, especially in the 2017, 2018 hype.
I think that's what's turned a lot of people away because a lot of people got burned on it. But the fundamentals weren't there. And, I'll dive into that a little bit because I think that's what gets people turned away is, it hit 20K, went from 600 to 20K in a year. But that's because what happened was Bitcoin had risen, I think right before Thanksgiving, it was around 8,000. And then between Thanksgiving and Christmas, it hit 20,000. That's because everyone was around their families. And this happens with a lot of assets and a lot of trends, actually, is that during the holidays, everything rises up. People started hitting up Coinbase, which is the number one retail market for U.S. investors. Everyone was buying Bitcoin, and it rose up, and all of the smart money, quote unquote, that we say sold at the top, and everyone's getting out and ready for deflate. The technology wasn't there at that time either.
What happened is the public didn't realize that Bitcoin had already been in a 2-year trend, and it was, making a top. If you look back at the charts now, it's obvious. Obviously, in hindsight, it's very easy to see. But they didn't realize that they were getting at the end of the trade. I got in at the end of the trade. I got in October of 2017. Still made massive gains because I was in on wave 5. When you're talking about Elliott wave theory.
That's literally the last wave.
The last and most powerful wave is where I got in towards the beginning of that. I sold Bitcoin too early, and then I made it back up by getting into an altcoin.
We'll dive into that later.
And that started the addiction there. But it was very interesting to me that I could, speculate and make money on this. But then I kind of really dove into the fundamentals of what the heck is going on here, because I've been, kind of bearish on the Fed for many years prior to being into cryptocurrency. And it's really designed to counteract the central banks. And what people are seeing across the world right now are all the central banks, not just the Fed, not just Powell, the ECB, China, Japan, everywhere is instituting quantitative easing. They're all printing more money across the planet. Okay. And we're not feeling the brunt of it yet, as we spoke before, but this Bitcoin is international. The United States, our population is actually pretty slow to getting onto cryptocurrency.
It's a borderless payment network.
It's borderless. It's international. I personally don't see globalization going away. A lot of people are calling that globalization's dead. I think as long as the internet is active, there's going to be globalization, and your business better tap into international markets. I read something about 13% of small businesses do global business in this country. However, 30% of our global business comes from small businesses. So small businesses are really the ones that are going global, are making a killing doing it. And if you're doing a business, if you're starting a business with this transitionary period, like a lot of entrepreneurs are taking advantage of the opportunity.
A lot of big businesses are born out of the recession. I know Uber was one of them last year. There was a few tech companies out of there that really, even the social networks, they weren't born in the recession, but they really boomed during it because, everyone needed to be able to connect to each other somehow. And they found that mechanism. And granted, that may not be the same mechanism for this one, but somebody will find whatever that trend is and they'll build the next billion or $1 trillion company.
And you're going to need to, in the future, your business is going to have to be cross-border. It just is. And people are all, at the same time, people are seeing that, I don't really agree with my government across the world. You see all these different countries in Europe having their populist revolutions, and you see us with our populism here. We don't even have the old parties anymore, really. And people are, they're getting fed up with the government, and I can see a future where people are saying, you know what? No, I am going to do business with people in South Korea, and I don't want to have to exchange my currency and lose money there in the FX market just to do business. I'm just going to send them some Bitcoin, especially if they're using it. So statistically speaking, where are we at in total Americans that have even owned Bitcoin at one point in time? Is that about 3%?
Dude, I know at the beginning of last year, it was like we had almost approached 1%. So now it's probably about 2, maybe 3%.
Okay.
People are diving into it just because the exposure is there. People are realizing that it's, decentralization, that you don't need to trust anybody else with the situation of your money. And
so to put into context how far we are behind in this country, so we have, optimistically 3% of our population has even owned Bitcoin at one point in time. That number in South Korea is over 35%.
Yeah, it's still even with those numbers, it's still really early in the crypto space.
Oh yeah, they're a much smaller market than us. They're a much smaller market.
A lot of people get turned away because it's a $10,000 price tag, but it's still so early. And we'll get into some numbers, but what people don't realize too is that Bitcoin can be divisible into the 100th millionth decimal point. That's literally 8 zeros in it. So think of it like cents. And there's 100 cents in a dollar. there's 100 million sats, or it's called Satoshi, in honor of the pseudo-anonymous creator, Satoshi Nakamoto, in one Bitcoin. So you literally don't have to put 10K to buy one. You could literally put $10 into it.
Correct.
And some people don't realize that. And even with the $10,000 price tag, the market cap, I think on Bitcoin now is like roughly around 200 billion. Paul Tudor Jones said that gold is going to be, or looks like gold 2.0 or 3.0 of the 70s. Gold's market cap is $8 trillion. $8 trillion.
Correct.
That's what? So we have 40x to go if we want to reach that, roughly.
When you actually talk about the numbers, it seems ridiculous. So it's hard to measure it by gold. I've done those measurements and I really like those numbers a lot, obviously. But let's say we can even look at it conservatively. Let's say Bitcoin has market penetration, takes 10% of that market, right? Another 800 billion. So now you're at $1 trillion of market cap for Bitcoin. Where does that put the price?
What's that, like 50K, 100K?
Yeah, and that's
50K?
That's
modest. That's very conservative.
Well, that's my conservative short-term projections. I think that we're really, if we want to put our moon boy hats on right now, I think starting, we're going to trend up majority of the year, and starting in December, Q4 of this year, Q1 of next year, we're going to see our first massive pop. And then Q4 2021, I'll give you my price projection. I will give you my price projection for this cycle is 150,000. Between 100 and 150.
And it sounds unrealistic, but when you look back in 2017, the run up, it took Bitcoin 10 months to go from 600 to, or we'll say 11 months actually, to go from 600 to 10K. It went from 10K to 20K in like 3 weeks.
Correct.
Because you're basing off percentage points,
It's compounding.
Yeah. To go 50% from 5,000 to 10,000 is $2,500, but to go from 50% 10K to 20K is $5,000, and so with the deflationary hard cap of 21 million coins ever minted through the mining process. And what we mean by that is, if you've heard of the Bitcoin halving, I was always talking about it. A lot of people talk about it. It's the deflationary consensus algorithm that's built into it. Satoshi designed it, 21 million ever Bitcoins ever minted. Every 4 years, the payout for Bitcoin, which is the payout is the block reward, which is the amount of power everyone on the entire network contributes towards the transaction verification. Per block, it was 12.5 Bitcoins every 10 minutes getting issued all over the world to all the miners. As of last Monday, so almost a week ago, it got cut down to 6.25. And if you're just playing basic supply and demand, what happens if anything gets cut in half? You see this trend with a lot. My last guest on the last episode is a sports card dealer, and he talks about how a lot of these sports cards are issuing one-of-one cards, and those cards are worth $50,000 because it's a scarce asset. And with any scarce asset, price number go up. And that's where you get all these moon boy numbers from. And it seems unrealistic, but you're literally just going off of past historical data that's into the systems.
Exactly. And, you have, 50 million people own Bitcoin?
You could say roughly that.
Roughly around that. We can easily, in that population in the world is what, 7
billion. And
people?
There's only going to ever be 21 million coins ever. And the last Bitcoin ever mined will be 2140, but they said that 99% of it, based off of it, keep getting cut in half. Within 20 years, 99% of it will be mined. So if you just think about that, by 20 years, what could happen when 99% of Bitcoins ever mined? You literally start seeing 10, 20, 30, $40,000 price swings, which could be only 5% swings or 10% swings based off whatever the number may be at the time. And so people start to realize this with Bitcoin. It's borderless, and you can't hack Bitcoin either. You see hacks, but the way that it's built is after every 10 minutes. This is why it's called blockchain. Trend word, buzzword, blockchain. After every 10 minutes where the block reward's issued, every block stacks on top of each other, which makes it an immutable public ledger. You could go through and you could go on, like there's an Internet Explorer. There's a Bitcoin blockchain Explorer where you could literally go on there and see every transaction ever issued in Bitcoin's history. You can do this with multiple chains, but this is what makes blockchain so I guess privy, because the Fed prints money and they say this, but there's no way to verify that this is being done. And with Bitcoin, you could literally just go look at it on a public ledger.
And to speak to that, it's kind of a little ridiculous when you have people like Mnuchin, which, hey, say what you will about Mnuchin, I think he's doing the right thing currently, but he is definitely anti-crypto. He claimed last year that majority of Bitcoin transactions are used for money laundering and illegal activity, but that's asinine. It makes no sense to do any illegal activity with Bitcoin because it's easily trackable. It's the most trackable, actually.
Literally.
You can see exactly who sent what, how much to each person. And that's an issue with Bitcoin using as a currency. It's not fungible, they say. So you can be tracked with it. That's why people like the privacy coins,
Monero,
such as Monero, PIVX.
If you think about it, though, the dollars could be more anonymous than Bitcoin is if you're doing a cash transaction.
Most illegal activity occurs with cash. Plain and simple.
In Bitcoin's early days, it was actually used illicitly through a dark web marketplace called Pirate Bay. It was Pirate Bay, right? Is that what it was?
Silk Road.
Silk Road, yeah. Pirate Bay was after. Silk Road, which is basically an online marketplace where a lot of bad stuff happened on there. There's weapons, guns for hire, sex slavery, like a bunch of different things were done on there. And at the time, Bitcoin, this was in 2013.
My buddy showed it to me when Bitcoin was $1. And I was like, he's like, oh yeah, you can buy these things to trade on the internet. And I was like, why? Who would ever buy fake internet money to spend on the internet? That doesn't make any sense to me.
Magic internet money.
I know.
But people were doing this to circumvent the government and use a dollar because the dollars are all traceable basically through their serial number. And Bitcoin was so new, the government really didn't have any idea what the fuck was going on. And so a lot of people got in trouble for that. But as Bitcoin's been maturing, the technology's been progressing. Think of Bitcoin as like kind of how you see Windows on a computer. That's like a computer software. Bitcoin's like a financial software, and you could build things on top of this blockchain, which would be called layer 2 applications.
So let's break down the buzzword blockchain. Okay. So I heard a lot of analysts in the last Bitcoin bull market talk about how, and I'm sure some of the listeners have thought this as well. Well, I like blockchain, but I don't like cryptocurrency, right? And that's very common. IBM's got their blockchain coming out. Citigroup is actually announced to Bloomberg that they're going to be using blockchain, and they're going to make their customers use blockchain.
Traceability.
Now, can you have blockchain without cryptocurrency? Not if you want to be decentralized. The entire basis of the blockchain being secured, if you can imagine a blockchain as a distributed Excel file, okay, telling you exactly who moved what to where, and it keeps a perfect accounting of who has what Bitcoin, okay? It's public, and no one can control it. The miners are who secure the blockchain to make sure people aren't double spending.
Which is around the world.
Exactly.
No one central inflection point.
Exactly. And the miners need to be incentivized to do that job. So they have a job to keep the spreadsheet secure and accurate, and they verify that everything is accurate. And in turn, they are paid out with the Bitcoin that they mine. And that's how basically it works, and which is why you'll never have a truly decentralized blockchain without a cryptocurrency attached to it, because it has to have an incentive to not to have miners prove that people aren't double spending. So yeah, you can't have a true blockchain without cryptocurrency.
And this is what makes Bitcoin by far the king in charge. Is there's no leader. Like Satoshi itself, nobody knows who the fuck it is. So there's no CEO. Can't be shut down. And once the code of a decentralized proof of work blockchain, which I'll touch on, is issued, you can't turn it off. It can never be turned off. The only way it'd be turned off is if all the miners stopped, or there was a miner takeover, which would basically be, it's called a 51% attack, where it's like 51% of the mining power basically creates like a cartel gang. And once they take over 51%, then they could change the basically the rules of Bitcoin. But there's game theory, which is just a whole entire different, you could talk on that for hours. And that's game theory's incentivization methods that are built into pretty much everything in the world: politics, blockchain, finance, literally monopoly. Everything has some sort of incentivization mechanism that's attached to it. But that's what makes Bitcoin the king on top, is that there is literally no one inflection point. Whereas you look at like the number 2 crypto is Ethereum, which is created by a guy named Vitalik Buterin. And I think if he ever stepped away from the project, the entire project would just die, because people have so much faith in him for building out, which, I give him props for, but there's no one central focal point in Bitcoin. So you can't just like as Ilan was stating earlier, that you need social confidence in these sort of systems like the government and fiat and whatever the case is. And if that social confidence is lost, then it's basically the whole system falls apart.
Exactly. And people losing confidence, when I say people, institutional investors are losing confidence in central banks across the world, because everyone's realizing that these bankers are humans and they make mistakes. And they make policy changes that maybe they shouldn't have. Bitcoin has a set algorithmic policy to actually deflate the currency over time, and that's not changing. So there's no one in charge to make a mistake. So people can trust in that. I'm not. A lot of people are very bullish on Ethereum. My issue with Ethereum is I prefer Ethereum Classic.
Can you explain them what actually Ethereum is? We should touch on that, because that's Ilan stated earlier what a blockchain is, and people, like you said, Citigroups issuing their own blockchain, and people are starting to discover that you can do different things with a blockchain as far as like supply chain metrics, traceability, finance, and there's probably still a lot of different things that can be done with it that have yet to be implemented and discovered. But the number 2 is Ethereum.
Exactly. Another use case for it is title, real estate title. That relates to my job. They've actually experimented with Ethereum, using that for real estate title records in the northeast part of the country. I forget which market specifically it was, but Ethereum is basically trying to become a new, more secure internet, if you want to make it simple. They have a lot of decentralized applications built upon them.
It's called dApps for short.
And Ethereum is trying to increase the throughput of blockchain transactions so that you can do more with it. Basically, Ethereum would be the gas of the internet. It would give you your resources you need to use said application. It's a little complex.
It's
a little complex to wrap your head around it. It might take a little bit of studying to wrap your head around Ethereum. And it's a very promising project. It's got the second most amount of developers in the world working on it, second to Bitcoin. And they're going to roll out Ethereum 2.0, which is supposed to solve some scaling issues that it had prior to today. But my hang up with Ethereum, personally, I'm a little conservative, and back in 2017, there's a phenomenon called CryptoKitties.
And hold on, let me cut in real quick. Ethereum, to make it sound in simple terms, it's called a smart contract platform.
Yes.
That's the buzzword that he forgot. It's basically, it's another, like how Bitcoin cuts out the middleman of a transaction. This cuts out the middleman for basically anything. Like if you wanted to create a decentralized Uber application where you just cut Uber out, but you still have the same software as Uber, you can do that. And now they're starting to do that, take that smart contract idea and implement it across many different things, which ironically, the first popular decentralized application was CryptoKitties.
Yes, and before we get into CryptoKitties, the having title of a real estate transaction plays into the smart contracts. You have these set parameters for the transaction, and the money it's almost like an escrow. The money isn't released until X, Y, Z is checked off, and then it's automatically released by the algorithm to the other party. And that can be for money transfers. It could be for utilizing an app in a certain way. It could be for signing there was a dating app. There's a dating app I remember that was using smart contracts to have people sign consent forms.
Smart concept, actually, with how I guess the world of dating and one night stand culture is going. And
then then you have your consent form signed on the blockchain, so it can't be forged or anything, and it's time stamped and everything.
And you can check and verify.
And it's you can verify it. So, great concept. When I first came into crypto, I was all in on Ether. I didn't have any Bitcoin at first. I had a little bit. I had a little bit of Bitcoin, and I had mostly Ether.
Actually, I was the same too. I should note that as well.
Because I was like, oh, this is so much broader than Bitcoin. It's really going to be the new internet. That's what was in my head. And then CryptoKitties happened. So it was a decentralized app where it generated very unique cats.
It's like cat collectible cards.
Cat collectible cards. Each cat was individual. It had its little stamp. It could not be recreated.
One of one kitties.
One of one. And then you could make different cats and come up with a new one, and that one would be rare. I think I saw one trade for one of these CryptoKitties sold for $250,000.
Yeah.
Okay, it was massive. So the issue with it was it pointed out how far Ether had to go before it was usable, because it was one of thousands of dApps that was being developed on Ether, and that one app froze the entire network.
The entire network
froze on a trading card game. So obviously that proved to me, well, Ether's got some years to go before it's usable. And, God forbid the world falls apart. Everyone needs to go on to cryptocurrency. It's not ready to take the money.
It's just like now where you see when the world shut down, everyone's going to the internet, and Netflix and a bunch of these bandwidth companies had the fear that the internet might shut down because everyone was on it. And the internet's been around for what now, almost 30 years, 20 years, 30 years. And if they could have issues with that, imagine if everyone on the entire planet was on one smart contract platform.
Exactly. And that's my bullish case for not just being a Bitcoin maximalist and going into altcoins as well, is because if there is the massive run to the door of cryptocurrencies, Bitcoin is not going to be able to take on all of the money and all of the active addresses. There's going to be overflow into the other currencies as well by necessity. But back to Ethereum, another issue with Ethereum that I have when you're talking about decentralization as the macro movement, this era. Ethereum had a hack in 2017. Someone stole a lot of money because they were rolling out a smart contract that had a bug in it. And
I think this was before 2017. Actually.
Was this 16?
I think it was 16. Yeah.
16, 15, 16?
Yeah, it was like 15 or 16. Yeah.
Okay. So there's a massive Ethereum hack. Massive. A lot of money lost and Ethereum stolen. So, the community was in outrage, and the founder Vitalik went and did what's called a hard fork.
So yeah, hard fork. Yeah.
It's where,
well, first he issued what was called a rollback, where basically people realized that this isn't a decentralized currency. If he has the power to basically hit rewind on the amount of transactions and basically like freed up that $50 million, and a bunch of people in the community did not like this because everyone's pro decentralization like Bitcoin.
Exactly. So Ethereum, as decentralized as the mining is, it's still not as decentralized as Bitcoin or, other UTXO coins. We might mention a couple like
we'll get into it. We're going down the list now.
We're going down the list. We're going down the top 10s. So yeah, I have a little bit of Ethereum, a little bit of a problem with it. However, I do like Ethereum Classic. And Ethereum Classic is the remnants of the original chain.
Yeah, it's the fork. So basically, when you get a certain amount of miners, which we said earlier was dedicating the computer power, if you get a certain percentage of them committed, you can basically make a copy of the chain with your own variations to it.
Well, Ethereum Classic is actually the original chain,
yeah. And
Ethereum is the fork. They're like the Bitcoin Cash of Ethereum. But the reason why I like Ethereum Classic is it's actually decentralized, and Grayscale, which you mentioned earlier, is extremely bullish on Ethereum Classic. In fact, they hold a lot of Bitcoin. Ethereum Classic is one of their top 5 holdings. They currently have $76 million invested in Ethereum Classic in their fund.
They have like a few billion in assets. In assets.
And total assets.
Total assets, yeah.
So 76 million in that one. I think they only have $1 million of Litecoin, which is surprising to me, considering the economics of Litecoin. We'll get into that later. But there's once you start diving into the space, there's definitely different sectors that people don't even realize. They think all cryptos are the same. They're not.
Stable coins.
There's stable coins built on top of Ethereum. So Ethereum does have utility currently. So that is a bonus to Ethereum.
Just privacy coins.
Internet cloud
databases, supply
chain databases, oracles. I mean, there's
DAOs, all kinds of stuff.
There's this space is just wide open.
That's why right now there's I think on CoinMarketCap, which is the #1 website for quoting price and exchanges, which was recently bought by Binance, which is the #1 exchange, which we could also talk about. They have, I think, 5,000 cryptocurrencies quoted. Granted, probably 80% of them are dead cryptocurrencies. But like I said earlier, once you turn on a crypto, you can't turn it off. So
as long as someone's mining it, it's still active. And they have decentralized exchanges now.
Yeah.
And they're in the works. A lot of projects building on top of other projects. It's a very vibrant space, and it's, at least on the millennial side, I would say, one of the greatest opportunities for us to put on the VC hat, the Shark Tank hat.
Yeah.
Do our research. They're all public. So, you find an exchange that you can purchase something on, and then boom, you can start with any fraction of money. It's the cheapest and most scaled way for a small time player to get out of the dollar if you expect inflation.
It's how to get our power back, guys. That's why you see a lot of these billionaires like Mark Cuban, Warren Buffett, where they're anti-cryptos because, let alone their beliefs, it somewhat takes power away from them. And also they don't need to get into crypto because they're already at the top of the food chain.
Exactly.
Like what's it matter to them to get into Bitcoin because they're already in the 0.1% of the entire world. And you probably didn't realize this, but Warren Buffett's actually the biggest shareholder in all three banks in the United States.
And Nevada Power as well.
Yeah.
He likes monopolies.
Think about it. He's the largest shareholder in Bank of America, Chase, and Wells Fargo.
He's U.S. Bank.
Or is it U.S. Bank? Yeah, and Wells Fargo. Mm-hmm. Why would he come out and support crypto when that goes against his entire investment ethos?
Exactly. We're the alternative to the banks. This, like I said, this is the remnants of Occupy Wall Street. And yet again, we're seeing the effects of their mismanagement of assets and how the money is flowing to the top of the food chain. A lot of people are blaming capitalism at this point in time. I'd like to defend capitalism. It's not a capitalism problem. It's a human nature problem.
It's a cronyism problem.
It's, the Pareto distribution. It happened. It occurs in every single system, including socialism, including communism. Except in capitalism, you have the chance to fight back, and that's why I'm very pro-capitalism. We have the chance to buy Bitcoin, unlike places like, let's say, for example, China, where they can tell their people, no, it's illegal to trade cryptos. You can't do that.
And they did that for years and years from. Fucking 2013 all the way up until literally, was it this year the Xi pump happened?
Yeah, they just recently
banned it. And every time China banned Bitcoin took a nosedive in the beginning years because it was in its infancy and only took a little bit amount of money to send it down 30%.
Exactly.
But then President Xi came out earlier this year and said that they're creating their own blockchain sector and that they had been actually working on their own CBDC, central bank digital currency, for the last 4 years. Yes. So basically they told everyone to stop while they work on their own.
Exactly. And President Putin is extremely bullish on cryptocurrency as well because he's been in a long time fight of trying to get off the US dollar. Obviously, he's not our friend, guys.
That's why he sent the oil market tumbling.
Correct. He is not an ally of the United States. Sorry if you think that way, but Russia is still Russia, guys. So he, in one interview, he's actually very educated on cryptocurrency.
Huge.
He's Vitalik's boy. That's another reason I don't like either. Him and Vitalik are pretty close. A reporter asked him, when is Russia going to release a cryptocurrency? And Putin educatedly responded that you can't have a cryptocurrency that's owned by the government because that's against
because it's centralized.
It's centralized. It doesn't work that way.
Which is a fucking brilliant answer, especially in somebody of his power.
And I was taken aback. I was like, shit, we are so behind. We are so behind. If Putin knows, Xi knows,
North Korea is actually a big crypto person.
Everyone was afraid when they thought Kim was dead that they're going to liquidate $600 million worth of Bitcoin.
Yeah. So when all these crypto exchanges, and we didn't dive in what a crypto exchange is basically just a place that sells cryptocurrency, whether you want to trade your dollar for Bitcoin or you want to trade your Bitcoin for Dogecoin or fucking.
It's the E-trade of crypto.
Yeah. And there's so many across the space. There's literally hundreds.
Yes.
But Kim Jong-un was actually responsible for like $400 million in crypto hacks through his hackers. And so it's reported that he has $600 million worth of Bitcoin from these hacks. And when everyone thought that he died, that this money would either, if it was lost, it'd be awesome because it'd make the price obviously go up because therefore deflates the currency. But if he was dead, that somebody would come in and just sell everything, sell off the market. Exactly.
So there's a lot of market supply theories, metrics and theories out there. The Venezuelans are really quick to getting onto currency.
Dude, a few of the third world countries that have this hyperinflation are diving into Bitcoin right now.
Africa leads us in cryptocurrency. Asia leads us in cryptocurrency. South America is going to start leading us in cryptocurrency. Russia leads us in cryptocurrency. It's really NATO that is lagging because we own the world. Let's be honest. Let's be frank here. United States is an empire and we do it financially. We don't do it with bombs. Sometimes we do with bombs, but majority of the time you'll see politicians talk about sanctions. We're only able to sanction people because we are
the reserve currency.
We are the reserve currency, and we are an empire, and the whole world belongs to us, really. Everyone afraid of China owning the United States. That's not how it works.
That ain't getting paid. Also, too, I did want to note that, I already forgot what I was going to say. We turn the subject too fast. That happens in the crypto space.
Crypto, a little bit of, you'll find a lot of the crypto guys have major ADD. There's just so much to talk about it.
Dude,
it's fantastic.
It's literally a cult. I fucking love it. And also do want to say that we have officially broken the record for longest podcast guestless history, and there's still so much more to go.
I know. Hey,
I fucking love it.
It's great. I'm having a blast
Cheers.
right now. I'm having a blast.
Water cheers.
I'm having a blast. Why don't we break down, at least for your listeners, looking at Coinbase. I would recommend Coinbase.
Yeah. So there's two big places you could buy Bitcoin right now. There's Coinbase, which has become like the number one retail market. It also has become what we call an altcoin fucking shitcoin casino.
Correct.
Because they're listing all of these like random projects, and who knows, again, problem with cronyism. Who knows? There's wide speculation of coins or CEOs of projects of these coins paying exchanges to get listed onto their exchange.
It's not a rumor, that's a fact.
It's a fact, which therefore pumps their price. And so, again, centralization problems. You can also buy Bitcoin from Cash App, which is Jack Dorsey's project, which if you didn't know, Jack Dorsey is the creator of Twitter.
And he also buys $10,000 worth of Bitcoin every single month.
He's probably the biggest Bitcoin bull, or just, I wouldn't even say bull, just pro Bitcoin. He wants to implement it into Twitter. He's done it through Cash App, all these different dedicated methods. But, I remember what I was going to say earlier. The one way that the United States has put a hold on cryptocurrency is that they have classified it as property or like a commodity, whereas you see places like Japan where it's classified as a currency. And so if you are classified as a currency, then you don't have to pay taxes going in and out, or it's like significantly smaller taxes. And here in America, since it's classified as a property, anytime you trade out from Bitcoin into dollar, you have to pay capital gains taxes.
And, I have if we rewind back to 2016, Trump is elected. Early 2017, he implements the new tax plan, and I was pretty bullish on that because at the time, like you said, cryptocurrency was considered like an asset, like a piece of land, right? In real estate, and this was true at the time. In real estate, when you trade for a like type property, that's called a 1031 exchange. Okay, that's a tax code. That means that it's deferred capital gains. That means that if I sell my property and I identify a new one within 120 days and I close on it, I don't pay any taxes. Okay, this is how the rich get richer. And I've sold $100 million worth of real estate. I've seen this occur. Majority of the deals occur via 1031 exchange. Someone's selling a property they bought way back, appreciate in value. They have no debt on it now. They sell that, they take that, and they buy a like type asset, any other piece of real estate. And cryptocurrencies used to be regulated the same way. So let's say I trade Bitcoin for Litecoin, it's like type asset. I only need to pay the taxes when I come back to the dollar. Okay. So I don't pay taxes on the exchange of Bitcoin and Litecoin. Now with the tax plan, I was like, oh great, we're going to get even less regulations on our taxes. Wrong. The Trump administration actually had a special carve out for cryptocurrencies, eliminating 1031 exchange for cryptocurrencies. So now you actually have to pay taxes on trading between different cryptos.
Which it is a little bit tougher to track, but it is something that they want you to self-report.
Yeah, if your account size is under $20,000, you can trade all you want. Don't worry about it. When you start getting into real money, it's an issue. It's an issue, and it incentivizes people to trade less, unless you want to, be a day trader, which majority of people should not do.
You will lose your ass really fast.
This is one of the most difficult markets to trade in the world. It's very volatile. There's a lot of manipulation at this point because it's so unregulated. But that's also the appeal, because there's a lot of volatility to the upside as well. And the people who actually do the best are the ones that just buy low and hold on to it for a little while, and then realize their gains at a later date.
Stack sats, baby. Stack sats.
Exactly. So yeah, tax-wise, the United States is not the friendliest towards crypto. However, like I mentioned before, it's not just an asset within the United States. There's a lot of other countries that are starting to incentivize cryptocurrencies. Switzerland wants to become the capital of cryptocurrencies. Surprise, surprise, Switzerland. The banker of the world is like, hey, I want to get on this Bitcoin early. So I'm extremely bullish on it. Do you want to run down a quick snippet of fundamentals behind some of these top 10 projects?
Oh yeah, dude, I would love to. We'll dive into some of them,
because I feel like, a lot of listeners will get, turned on to cryptocurrencies.
Just the idea and the concept of a lot of these.
And it'd be good to educate them on what certain projects are trying to achieve. What
are scams?
Which ones are scams? One that you invest in.
I stay committed, but I don't know how I did it. I was waiting for the mega pump.
What's his name? Brian Gold something?
Brad Garlinghouse.
Garlinghouse. He's dumping on your ass.
Disclosure, I did invest into XRP like a year ago, decent amount, and I'm still holding on to it. Just quote unquote, it's called scams pump the hardest.
Yes, it is true. It's just hard to time those things, and it's hard to hold on to them knowing that they're just dumping on you every day.
I'm one of those guys where I just buy it and I swing trade. I'm making trades like once a month, every 2 months, once I hit a target, and I'm either going down with the ship or I'm riding it off into the sunset. But what XRP is actually the number 3 asset. I actually think it just got passed by Tether.
Yeah.
But we'll talk about that. XRP is a proof of stake coin. So this is the first time we've covered that. Proof of stake means they issue a hard set of coins in the beginning. But with XRP, they put their own little twist variation to it, which you'll begin to question. But they say, okay, there will only ever be I think in XRP, it's like 100 billion coins or XRP tokens, whatever you want to call it. And XRP decided, well, we're going to actually keep 80% of it in the beginning, and we're going to issue out 20 billion. And then every quarter, we're going to sell off whatever we seem fit, as far as like, I don't know, maybe Brad wants to buy a house or something. And so this has kind of classified as a scam because they consistently dump on you. But their goal was they want to be like a bank-to-bank transfer network and remittance network, which they do.
Correct.
The number one use actually for cryptocurrencies is remittances. So people who are working in the United States and are sending money back home, and they don't want to have to pay the 10, 20, 30%, whatever MoneyGram charges you to send money back home. And you can do this at literally less than 1% of a transaction fee of the total amount.
Exactly. And so it's important for someone new to the space to understand that there's Ripple, which is a company, and then there's XRP, which is the coin or token that is the network that they're trying to sell. Ripple, the company, is going around to different banks trying to sell their product, which is XRP. And the market that they're targeting is Swift. And that's the market leader of bank-to-bank transfers across borders. So let's say you have a bank transferring money from New York to Asia. Okay, they use Swift. It's got a high transaction fee because who else does that job? XRP is supposed to be cheaper. I don't believe it is yet, and faster. and Swift takes some time. So XRP's mission statement is to be the global leader of cross-border transfers of money and do it faster and cheaper. And that's what XRP is. Now, fundamentally speaking, when you're talking about cryptocurrencies, it's not decentralized and
at all.
And that's why a lot of people, a lot of the old timers in the cryptocurrency currency space see it as a scam because it's not like a Bitcoin or even an Ethereum. And it's just a whole different metric.
There's so many variations of what decentralization is, and this falls everywhere outside of that circle.
Yeah. So if we're talking about decentralization, let's say 10 is the most decentralized you can get, and 1 is the least. Let's say Bitcoin's a 9.
Yeah, 9 or 8. Yeah,
8 or 9, and XRP would be a 1.
100%. Yeah.
Okay. So XRP not decentralized, so you're not benefiting from the macro trend of decentralization, but you're betting on them taking over a pretty large market.
Very large, like in tens, 20 trillions.
Yeah, they're shooting for a very large market. I mean, dollar transfers is many times the scope of the gold market. You're talking hundreds of trillions now.
Especially if the dollar collapses too, then that just becomes even farther or even more of a gold mine for them.
Exactly. So that's their whole basis. You're really shooting for the moon there, but you have a lot of risk of it not working out. However, I will say they've maintained the top 5 status ever since for years now. So, it looks less and less of a scam by the day, but I stay away from that one.
And then
personally.
Yeah. And then actually just past it today was called Tether, which is a stable coin, which has got
Tether's got a lot of baggage.
So basically what a stable coin is, and they're becoming very popular, is that it's supposed to maintain the stability of a dollar. So it's always supposed to be 1-to-1 dollar value, no matter the inflation, deflation, whatever the fuck happens. The thing with Tether is when it was created, it was actually owned by Bitfinex, which was the #1 exchange at the time. I believe this was in like 2015, 2014, somewhere around there. They promised that for every Tether they issued, there would be $1 in a reserve bank account, so that it was always backed 1-to-1. Come to find out, I think this is 2018.
Yeah, that whole
one of their payment processors got raided by the FBI in Panama. Come to find out, they only had like 10 or 20% of the actual value, and they were negative $750 million in Tether reserves. And so this sent Tether down to like 90 cents to the dollar, but it's since returned, and people use this as a way to maintain the dollar value, but not be in the jurisdiction of the dollar and the United States.
Yes, correct. It's very, crypto-centric, cyberpunk.
Yeah, it makes it a lot easier too if you're a day trader to go in and out of trades. And also Tether is actually pretty decentralized. I mean, it's issued by Bitfinex and the Tether Co. But the traceability of Tether is really hard to track.
Yeah, exactly.
As far as like an outside source, and companies like Chain Analysis, which are companies that are basically trying to discover bad behavior or just even find out what wallet is addressed to what person or things like that. It's somewhat tough. And then you add in random, like as we said, other applications like Liquid, which I'm not going to even dive into it, but all these different side projects where you can take Tether and then anonymize it even more. And basically you're trading like anonymous dollars, which is what makes it so powerful at the time, because the US can't, as much as I think the New York AGs actually sued Tether, and they're in a lawsuit for a while, but since it's out of the US jurisdiction, it's just more words than anything.
Exactly.
But since then, there's been a lot of stablecoin companies who are issuing their own. Coinbase has their own called USDC, USD Coin. There's like Pax Standard, and there's a bunch of other ones that are repurposing it to like the euro and GBP and all these other different ones.
Exactly. It's just to, keep your capital within that market, but also have some stability against your local currency.
I think Monero's good. It's the top privacy coin. I think it's top 10 or right outside the top 10. They have built into their algorithm a sort of privacy where it's called like ring architecture or something like that. But basically, when you send out a transaction, it masks you within 10 other transactions so that the chance of guessing which address is actually yours is very low. And especially if you send it multiple times, and it makes it like really hard to trace. And this is actually the preferred crypto used on Pirate Pay, which is the darknet marketplace.
And by North Korea.
Yeah, and North Korea as well.
I personally, I love the concept of privacy coins. However, I'm waiting for government regulations on that front.
A lot of exchanges are delisting it too.
Yeah, they're getting delisted, and it's harder and harder to acquire them. As a retail trader, just because there's so much uncertainty of how the governments are going to handle those ones. The governments are already very aware of cryptocurrencies, and they like the fact that you can trace Bitcoin, you can trace the traditional blockchains, which are all on the block explorer. The privacy coins kind of make you anonymous, and then you are able to do your money laundering and your illicit purchases via that coin. So there's some definite issues before we're able to use that fungibility aspect of privacy coins, which will probably come in the future. That's why I'm kind of patient on those ones. Would you like to talk about Bitcoin Cash BSV or Litecoin?
We'll go with Litecoin because it's popular. I'll let you explain it.
So Litecoin is a fork of Bitcoin created by Charlie Lee, who was a commodities trader. He used to trade precious metals. The whole basis of Litecoin is that it's 4 times the supply of Bitcoin, a lot more throughput than Bitcoin and even Ether. Uses a lot of the same source code. It's a UTXO coin, so it has the same mechanics as Bitcoin. It's a little lighter, Litecoin. Charlie Lee compares it to being the silver to Bitcoin's gold. The reason I really like it, and there's a lot of reasons not to like Litecoin because they slack on development. They're not highly developed, but they have a lot of market exposure in terms of marketing. They have a very strong foundation that's highly capitalized. And the reason I really like it fundamentally is that it's the main coin of all script miners. So just like Bitcoin, you're talking about game theory. The reason why Bitcoin likely will not experience a 51% attack is because the miners aren't incentivized to do so. It's the number one coin of their algorithm. And usually when smaller coins are hit with a 51% attack, what people do is they rent the hash power from larger mines, and they use that to attack the smaller coins and take up more than 51% of their hash power in order to double spend with it. Bitcoin, you can't rent any more power than is already there.
Especially with the halving just happened. Now it costs even more to do so.
Exactly. And if your number one mineable coin as a Bitcoin miner is Bitcoin, you have no incentive to crash the network. That's your income. You want to maintain Bitcoin's price. You want the price to go higher. You don't want to attack it and cause any reason for people to leave the coin. So Litecoin in a similar way has that relationship with its miners because it's the number one script, different algorithm, same mechanics as Bitcoin. So I do like that part about Litecoin, which is, one of the slow movers right now. They had their halving last year in June.
Something like that.
In about June. And we're seeing that it's going to take about 18 months from that half to experience its supply shock as it has in the past. If you look at their charts.
Yeah, it's been in like a downtrend since that's happened.
It's been in a downtrend ever since they had their half. But historically speaking, Bitcoin and Litecoin do not act the same after their halves. Litecoin in the past has done this exact move where it kind of lags about 18 months before the supply shock takes effect and the price is positively affected by it. So Litecoin, I don't want to put too many projections in too many people's heads, but I would be looking at Litecoin in quarter 3 and 4.
Yeah. And then you have, we'll go over a few more. Bitcoin Cash, obviously, it was a fork of Bitcoin because in 2017, the big thing with Bitcoin is it was called the block size, which is 1 megabyte, 1 MB, whatever the MB stands for, which is the amount of transactions that you could put in one block. And a lot of the miners wanted to extend that and make it bigger, which therefore like reduces the fee. And I think the speed is a little bit faster because Bitcoin, if you send a transaction, you need 6 confirmations. And depending on if the network's busy or not, if it's busy, it could take up to an hour. You've seen if it's not being used, like let's say the highway isn't full, then it could be literally 10, 15 minutes. But that's what makes it more secure. But a lot of these miners wanted to increase the size, therefore making it less secure, but therefore making it faster and the transaction price down. They basically got together and they forked it over a certain amount of consensus needed to do so. And it has not boded well for them or the fork of Bitcoin Cash, which is a fork of a fork, which is Bitcoin SV, which is also another cult tribal one, which Bitcoin SV is by this guy named Craig Wright, who claims to be Satoshi Nakamoto.
And he could not prove it in court.
Could not prove it in court, couldn't access the keys. Satoshi, when he created Bitcoin, he mined supposedly, nobody knows the exact number, but it was between like 800,000 coins and 1.2 million Bitcoins. So right now he's sitting on like what, $10 billion roughly, which, you know, if Bitcoin gets to where people think it is, he'll by far be the richest person in the world. He, she, they, it, whatever it is. But he has never touched those coins since they were mined. It's never been touched. But you can, if you're able to access that wallet, you can sign it with a message and say like, hey, I accessed this wallet. Craig Wright supposedly claimed that he could, never could in court, forked it to Bitcoin SV. Another scam. And
exactly. So flashback to 2017. The reason I sold out of Bitcoin too soon was because of the Bitcoin Cash hard fork. Now, at the time, I was very new to the space, probably like a lot of your listeners, and I was confused by it. You know, very similar picture, very similar sounding. It's Bitcoin's in the name, Bitcoin Cash.
Cash, best of both worlds.
Bitcoin Satoshi's vision, Bitcoin BTC. So which one's the real Bitcoin is the issue. And I just want to educate the listeners into them understanding that BTC is the real Bitcoin. And I would highly suggest avoiding anything called Bitcoin Gold, Bitcoin Cash, Bitcoin Satoshi Vision. All, you know, those ones are trying to ride the coattails, and they're not. I mean, they have real utility because they're blockchains. They might
could be used as a transaction.
Ethereum's trying to use Bitcoin Cash as a second layer solution. So, I mean, they do have that, but don't think that you're buying Bitcoin when you're buying Bitcoin Cash. It's its own blockchain.
Yeah.
And currently, I think Bitcoin Cash is what, 5?
It's fallen a little bit. I think it's like 7 or 8 now.
Oh, really?
Something like that.
You know, it just
got to be wary, got to do your research. But
exactly.
Then, yeah. So as you can see, there's all these different projects going on. Proof of stake, there's proof of work coins and proof of stake. Proof of stake, all the coins are issued at one time, therefore making it less decentralized, because if you if you gain control or a majority control of it through just purchasing power, then you can basically just run the entire network, which therefore makes it not decentralized.
Well, proof of stake ends up bringing us back to the whole situation with the banks, is that the money eventually gets concentrated because you're gaining, the holders are staking their coins. Basically, they're putting it up into an escrow where they can't touch it. And in turn for that, they're getting an interest rate return. And over time, you'll see that those accounts are going to, by the law of compounding, become massive. And the masses won't be able to compete in that staking market. And you'll have a similar situation as we have in the United States right now with wealth inequality. And that's why proof of stake, it just long-term doesn't work the same way as proof of work. Yeah. And it's kind of against the ethos of cryptocurrency, in my opinion.
Yep, and everything built on top of Ethereum and these smart contract platforms, they're all POS coins. You can't put a proof of work on top of a proof of work coin. It has to be a POS coin on top of it.
Would you explain to the listeners the difference between a coin and a token?
Oh, man. All right, yeah. So a coin is the supply that's issued from a proof of work coin or a network. A token is, you could call it a coin too. It's only usable within that specific network. Like, for example, there's the first one that comes to the top of my head. It's called Golem. It's built on top of Ethereum. It's basically a distributed power system within, I can't even remember. All these are so obscure. It's like a distributed, like you share power or unused power within networks.
Oh, is that the virtual computer?
Yeah.
The supercomputers?
Yeah.
So you can lend people your processing power?
Yeah, you can lend it between your computers. And so they have a Golem token for it. But outside of this network, the token's pretty much useless. There's no use for it without just exchanging the power between computers for each other. And you can do this for many fucking different things on POS tokens. Mm-hmm. That's a token. It's only used within the network. Whereas a coin, Litecoin, Bitcoin Cash, Bitcoin, Ethereum, all these other ones, you can use those coins within its own network and outside of its network as well.
Correct. So the way I like to think about it simplistically is a coin has its own blockchain. A token works on someone else's blockchain.
It's like a Chuck E. Cheese coin. It's only used good at Chuck E. Cheese. Outside of that, it does not work.
That's why Chuck E. Cheese has tokens, right? Arcade tokens and real cash dollars, right? So, you have very popular projects, and this one's on Coinbase, so people will see it. It's called BAT, Basic Attention Token. It's a great concept. It works off the Brave browser, where there are no pop-ups. Now, if you want to watch a commercial, you can get paid for it. And basically, Basic Attention Token is paying the consumer of the advertising for their attention. So, and advertisers have a more targeted way to reach their consumers. So it's really a really cool concept to make that market more efficient instead of just blasting out advertising dollars without a definite user base. You have a certain percentage of people that are going to be into your product, but with Basic Attention Tokens ecosystem, it would be a lot more targeted, right? So that's cool. A great concept. It's a token. It works off of Ethereum. If Ethereum goes down, it doesn't work anymore.
Yeah, it goes down with the ship.
It's down with the ship, and that's a little bit too much risk exposure for me.
Especially even like if Ethereum, since it has all these projects, CryptoKitties bloats the entire system, but now BAT goes down, not because of Ethereum, but because of CryptoKitties.
Exactly. There was not enough throughput on the entire network. And that's why I don't like any of they're called ERC20 tokens. Did they upgrade past ERC20 yet?
Probably, honestly. I haven't paid attention too much to it until they figure out.
They need to figure it out. They need to figure out the throughput issue because they have thousands of tokens built on top of Ethereum. And if one of them picks up adoption, none of the other ones will work because there's not enough throughput for them to all work at the same time. So they're pretty speculative, in my opinion. I think the way I segment the market is, I have the ERC tokens as kind of enterprise projects, enterprise blockchain projects.
They got VC backing too.
They got VC backing. They're centralized. They're trying to be a product. I look at blockchains such as Bitcoin, Litecoin, Ethereum. Well, I'll use Bitcoin, Litecoin, Dogecoin for now because they're all UTXOs. I view those as more commodities. Really, Bitcoin, obviously, with the block size, cannot be a currency. That's why everyone calls it gold because it's just very secure. You can move massive amounts of money efficiently.
Somebody moved $1 billion like a month ago for like $1.80.
Exactly. I mean, bankers are just in awe of this technology. The street isn't as much yet because it's so convoluted and there's so much jargon involved. But yeah, Bitcoin is great for highly secure, large transactions. However, it's not going to be usable by the masses as a currency. But that's why I see it as a commodity. So Bitcoin, Litecoin, Dogecoin, commodities, Ethereum, kind of like, trying to be an internet an internet network, and everything built on top of it would be an enterprise built on top of Ethereum. So I kind of segment the market in that way. Currently, it's still really young. So
still super young, guys, way young. Don't get distracted just by the Bitcoin price. There's so many other options, even though they're all speculative, and it's still overall in the entire market. It's only an 11-year history of cryptocurrency.
Exactly. This, to me, reminds me of, what the baby boomers got to experience in the 1980s when they all got rich investing in stocks. And now they have majority of the wealth in the country, and we're all complaining about, wealth inequality is a big issue, and now I'm thinking about being a socialist. Like, I think we could stick to capitalism. We just need to identify the market. We've just overtaken the baby boomers in terms of population, so we set the rules now, and we have the opportunity to set the rules, moving towards crypto and blockchain. And the space is wide open. These projects are well funded. There's a lot of good ones out there if you do the research. And
Digibyte's out there.
Digibyte.
I know you want to talk about it.
Digibyte is out there.
talk about it. I know you want to.
I was trying to avoid it. I
know you want to. This is Ilan's baby. He loves it. So it's also a POW coin.
So I have to disclose. I am invested in Digibyte, the Digibyte blockchain. It's originally forked from Litecoin, but it readopted Bitcoin source code. So Bitcoin is the most developed cryptocurrency on the planet, has the most developers working on the project with the best code. Digibyte is smartly just adopts the source code from Bitcoin developers. And what people don't realize is that these developers come up with a lot of different ideas, and a lot of them can't be implemented because of how expensive it is and how the miners want to maintain the integrity of Bitcoin. So they're not really willing to do a fork to update Bitcoin to make it a higher block size, obviously Bitcoin Cash. They're not willing to implement all these other test type developments. However, a lot of the smaller coins are more nimble in the market and are basically used as a test net. So, for example, Digibyte now implemented most recently what is called Dandelion. It's a privacy feature. Mm-hmm. It's a privacy feature originally developed by Bitcoin developers, where it basically, like a Dandelion, your IP address is now the transaction sent to another address first, and then it blossoms out to 10 different transactions. It's kind of like Monero, where you can't see exactly which IP address
it's like a guessing game
transaction came from, right? No, it keeps everything recorded on the blockchain, viewable by the block explorer. The only difference is you can't see exactly which IP address it came from, and that helps, so if you're moving millions of dollars, you don't want people to see what IP address you're sending it from, because that's where the hackers come in and they, they'll hold you up, they'll kidnap you. So I like that addition. Digibyte's claim to fame is it's about 40 times faster than Bitcoin. It's one of the most decentralized networks in the world. They've had over 200,000 node downloads. Currently active, I think it's about 20,000 nodes, very decentralized. More decentralized than Litecoin, not as well received as Litecoin, because Litecoin had Charlie Lee in Coinbase, and Digibyte's got a little bit of issue with getting listings on popular exchanges. But again, it's as speculative as I can get in this space while maintaining the fact that it's a proof of work and it is decentralized.
And public. And it's actually been one of the top producers this year.
Oh, you don't have to tell them that part.
As far as gains wise,
it's currently one of the premier gainers in the altcoin market. I'm very happy about that. Very pleased. I'm not going to advise people to purchase it now, but definitely keep a lookout for projects. There's a lot of projects like that.
Yeah, and that's a lower one too. I think that's ranked in like the 40s.
No, it's in the 30s now.
30s now, yeah. But so these all go in and out. As you can see, there's so much variation to it. You could literally go to page 100 and find shit called like Spank Chain, which is supposed to be for like porn, faster transactions. But then you have like the idea like, well, if I just wanted to do a decentralized transaction, why wouldn't I just use Bitcoin? So there's all kinds of different ideas that are surrounded behind all these different projects. It's literally a fucking rabbit hole. It took me probably 2 or 3 months when I first came onto it in the beginning of 2017 to figure out really what the fuck was going on.
I think it took me about a year. I'd say my only recommendation is if you're going to enter the cryptocurrency space for the first time and you're trying to make money at it, I would suggest that you start with just holding Bitcoin.
$10, put $10 in.
Hold the Bitcoin while you research the other projects. Do not go headfirst into an altcoin without knowing the fundamentals, without knowing where it is in its cycle. You should probably look at that. They're all highly cyclical. Okay, they're highly cyclical. You know, the time that your attention is put on an altcoin, it's usually towards the end of the cycle when the hype is at its highest. You might not want to do that. You might want to just go down the list, look up each of the chains, what they're about.
Coinmarketcap.com.
Coinmarketcap.com. Just go down and stick to the top 100, please. Don't go after the real speculative stuff to start. And then once you get comfortable in the space, then you know what a gem looks like.
Yeah.
Like I knew Digibyte was a gem. I knew that one was a winner.
Like I said, guys, dude, literally put $10 in, go to cashapp.com. They have procedure now. This didn't happen a few years ago called KYC. So now they ask for your social security number, history, all this stuff. If you want to get in the space, you literally have to do this now because the US has put restrictions on the international exchanges. You can only buy from the US exchanges. It's all geofence, track to IP addresses, social security cards, all this different stuff. Go to Cash App, most secure, buy $10 worth, learn how to simply send it back and forth to different wallets because wallets, we didn't even get in. There's so much stuff. We've been in this for like 2 hours and 20 minutes. There's still a ton that we didn't cover, wallets and fucking nodes and all kinds of different things in it. Like I said, we could go on, but the only way to understand
is to own it.
It's literally what I did. $10, buy it, text me, show me your transaction, Instagram. I will be happy. If I get literally one person on who's listening to this podcast, and if you've made it this far, thank you. I'm glad we could educate you on this. This is really, dude, if I could get one person out of this to buy Bitcoin, then I've succeeded at this episode.
Or even just research it.
Just research it. Guys, this is our opportunity to have what the boomers did in the 80s. Opt out of the system, hedge against inflation. As we know, we're recording this on a Saturday. Yesterday, the second stim bill passed in the House. Probably going to keep going forward. Helicopter money, MMT's coming. This is our opportunity, guys. Don't let your ego prevent you from this opportunity just because you think it's fucking fake magic internet money. All the people are getting into it. Even J.K. Rowling was tweeting yesterday trying to figure out what Bitcoin is, and she was kind of attacked, which, sorry, Bob, on the community.
That's the Bitcoin community for you.
Dude, everyone is so passionate about this space, and I'm sure if you've been here and you can hear in our voices the passion that stems because this is our opportunity to literally opt out. Buy one Bitcoin or buy $10, and eventually you will become a saving. You learn that this just number long-term just keeps going up, and your money value in dollars keeps going down. So
exactly.
This is our opportunity, guys. You heard the real estate aspect and how that affects pretty much everything and why we got to get out of the dollar. Not saying the dollar is bad, but there is a better option, and they call it Plan B.
Plan B. Plan Bitcoin.
Plan B, baby. I think we pretty much covered everything. Alon, this was a fucking amazing episode.
Hey, I'm glad I could contribute, man.
One of my favorites that we could go this far. I knew we were shattering the record.
I thought so. I
knew that we would get there, and we could go on longer and longer, but I got to build some credibility for everyone first before we can, come at this maybe a year from now and
let's see where it is
and we'll continue on. You could be the Bitcoin guy on the show.
Hey, I would love it.
Oh, dude, this is a fantastic. How can anybody that wants to follow you? Where do they follow you? If they want to get into commercial real estate, where do they go for that?
Okay. The easiest way is just follow me at Ilan Banner, Ilan Banner on Twitter. That's where I do a lot of my financial posting. I'm not too active on LinkedIn, but follow me on LinkedIn as well. I'll show you my history and what I do for a living. And just follow me on those platforms, and you'll be fed some interesting financial news. Not too much crypto, but I throw it in there every once in a while.
Can't turn everyone away. I literally tweet Bitcoin all the time, and I get maybe 1 or 2 likes.
I'll like it.
Yeah, Alon's always there for me. People will learn eventually. Like I said, if you're interested in Bitcoin, please message me. And if you do a transaction, screenshot it, send it to me on social media so I can give you a retweet, and I could be a proud podcast host and Bitcoin advocate that we are able to change your mind or just educate you on this. I thank all of you guys for listening. Episode fucking 10. We made it. Mama, we fucking made it. Tune in next time.